Welcome to our weekly roundup of key business developments in Sri Lanka. I'm Nishani Pigera. Let's first take a look at the top stories for this week. IMF commends Sri Lanka's economic progress. Steady decline in lending rates to boost growth. And plantation sector daily wage increase gazetted. In our top story this week, Julie Kozak, IMF Communications Department Director, lauded Sri Lanka's current performance. She cited rapid decline in inflation, robust reserve accumulation, and signs of economic growth as significant positives. Keeping with IMF requirements, Sri Lanka is currently in debt restructuring negotiations with private creditors and hopes to finalize in a principal agreement next month. Such a deal enables Sri Lanka to receive third tranche of $337 million in June. On a related note, Citibank expects Sri Lanka's sovereign bonds to gain further even without a debt deal by June. It assumes that IMF must have already received counterproposal options, making them take a lenient view of what is considered adequate progress. So far, Sri Lanka's dollar bonds have delivered double-digit returns and are expected to settle down at 50 to 70 cents to the dollar based on the proposals made. In a key development on Tuesday, the Sri Lankan government gazetted a 70% increase in the minimum daily wage for plantation workers to 1,700 rupees. The increase is for those engaged in growing and manufacturing of tea and rubber. This follows President Ranil Wickremesinghe's announcement at a May Day rally of efforts to improve plantation workers' livelihoods and address wage concerns. However, industry stakeholders highlighted that this will exacerbate financial difficulties they are currently facing from high production costs. During January to April 2024, production fell to 79.7 million kilos, down around 6% from a year earlier from dry weather and low fertilizer usage by smallholders. Merchandise exports in April fell 4% from a year earlier to $813 million. In the month, apparel exports fell 6.3% to $321 million, while tea, rubber, and coconuts recorded growth. Exports to the United States, Sri Lanka's single largest export destination, fell 5.1% from a year earlier to $183 million, while trade to the European Union expanded to $193 million. Meanwhile, services exports expanded by a significant 19.3% from a year earlier to $300 million. Sri Lanka's prime lending rate has dropped to a two-year low of 9.65%, staying just slightly higher than the policy rate corridor. Since June last year, the central bank has cut policy rates by 700 basis points. On Wednesday, the Economic Transformation Bill and the Public Financial Management Bill were presented in Parliament. The bills are designed to help the nation enhance the management of public finances in order to avoid future economic collapses, while also including measures to attract investors and improve productivity. The bills are a necessary condition that has to be fulfilled under the IMF program designed to help bring Sri Lanka's debt to GDP ratio to 95% by 2032. In our weekly tourism update, during the first 21 days of May, just over 79,000 tourists arrived in the country. In the year, almost 864,000 tourists have arrived. Daily arrivals were 3,782 in the month, down from the 4,962 recorded in April. India was the primary source market, followed by the Maldives and Germany. State Minister of Finance Shehan Semasinga expressed confidence in exceeding the $5 billion tourism earnings by year-end. The all-share price index at the Colombo Stock Exchange rebounded this week, with the index closing above 12,300. The index remains about 15% higher from the start of the year. Further, starting from 10th June, settlement time for equity transactions will be revised to T+2 from the current T+3. The move aims to improve transaction efficiency. At the Treasury bill auction held on Wednesday, yields on all maturities decreased for the seventh consecutive week, with 91-day maturities falling below 9%. Bids amounting to 370 billion rupees were received, of which 160 billion were accepted. The Sri Lankan rupee appreciated marginally against the dollar this week, with the central bank's indicative mid-spot rate ranging around 299 to 301 rupees. According to Ranjit Siambalapitiya, the State Minister of Finance, the central bank is now in a position to control fluctuations in the exchange rate. So far, the central bank has purchased over $1.6 billion from the market. Currently, foreign reserves stand close to $5.5 billion. And with that, we wind up for this week. Do subscribe to our YouTube channel at the link below for regular updates on economic and business developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.